Welcome to Wealth Beyond the White Coat, a show where we dive deep into the world of financial freedom for dentists and medical professionals. I'm your host, Darren Flesher, a dentist with a passion for uncovering the strategies that lead to a prosperous life beyond the office. Every episode will explore the avenues of alternative investing, tax mitigation, and secrets to build wealth that the textbooks don't teach you. Whether you're looking to enhance your financial literacy, discover new investment opportunities, or simply find a better way to manage your money, this is the place where your financial health is the core of our conversations. Welcome to Wealth Beyond the White Coat, where your journey to financial clarity and freedom begins. Welcome to Wealth Beyond the White Coat. I'm your host, Darren Flesher, here with my co-host, Ross Brannon. Today, we have a special guest with us. His name is Jim Woltmann. He's in New York, and he's a member of Legacy Point, and we wanted to have him on the show here today just to talk about experiences, the good, the bad, and the ugly of being part of Legacy Point, and a lot of the things we've done over the last, 12 to 18 months with Jim have started to bear fruit, and we just want to make sure that we start to talk about that a little bit and let people know what being a part of this group is like. So welcome to the show here, Jim.
Thanks for having me, guys. I appreciate it.
All right. We were just talking offline a little bit before we hit record here, and you were saying you wish you'd have done this a long time ago. What was your motivation for joining Legacy Point?
Yeah, so I guess I joined a practice some odd years ago, and I had three partners. I was the fourth partner in, and we had a pretty good business model where it was 60, 50, 40, and I was 30. So as one partner left, another one rotated in, and the business model really didn't work out all that well. We weren't able to backfill partners. So what ultimately happened is I bought out all my partners. And most recently, a few years ago, I bought out the last one. And then I went through some exercise where I thought I was going to have a capitalization event, and I was entertaining some offers to sell my business and possibly get some chips off the table. So that's when I started to look around for some groups to see how I can deploy the assets that I would acquire from the sale of my practice. Ultimately, I decided after about 12 months that it wasn't the right deal for me to do. But in doing so, I came across you guys through a friend of mine, Chris Green, and introduced me to Darren and to Matt and to Ross. And it's been pretty amazing. So what I thought I had a big chunk of cash, I didn't have, but I started to reallocate some of my dollars. And a lot of the other groups that were out there that had similar philosophies were super expensive, and I mean upwards of $8,000 to $10,000 a month. Which in order to do, you'd have to really deploy a massive amount of capital to get that money back. And then I fell into you guys, and that's been about it. I've been with you guys for about 16 months or so now.
And Jimmy, explain from a financial perspective what you have historically done, because you haven't stopped doing what you were doing. You've just started diversifying with some stuff that we've been doing. So what do you have an investment advisor? Do you have a practice 401k? Do you have a practice cash balance plan? Do you invest in real estate in your local area?
Yes, I have a financial advisor. My partners are really big with dollar cost averaging and saving every single month. And we have a pension plan through our practice with like cash balance plans. So we can put away a significant amount more into those plans. My buckets got to be a little bit off balance. And looking back on things, what sort of encouraged me to look for something new with you guys was that I had my tax deferral bucket was just getting way too large. And I needed to get some post-tax dollars to work for me. So that's the way I do it. I have my real estate where my building is. I have my personal home essentially, but I was considering buying some more real estate, but then I didn't want to be the landlord. That wasn't who I wanted to be. And that's what I thought was most enticing about you guys, was that you could take more of a side role into these investments.
And obviously you're pretty successful and you live in a high-tech state, New York. So you're paying a decent amount in taxes, correct?
Yeah, and that was one of my biggest goals, was to try and mitigate my taxes. It's massive. And that's something that you guys sat down with me, looked at my portfolio, and kind of coached me on how to mitigate or defer some of the tax liability to get a better return.
Yeah, you implemented a strategy last year that helped you save tax dollars, correct?
Significantly.
Yeah, we don't have to go in the numbers, but you save taxes and got a rate of return on your money by doing some things that we've talked about. Okay, cool.
Yeah, and we were talking offline here before we got started. Like you said, we don't have to get into specifics, and you haven't necessarily finished what you're doing from last year, but yeah, you've seen the fruits of that both on the return and the tax part of it. Talk a little bit about kind of the return and how that's different from what you've done kind of yourself before joining Legacy Point. How has that changed as far as what you've been able to accomplish here? Hey, I just want to interrupt real quick and say thanks for listening to the podcast. If you didn't know, we have an associated Facebook group also called Wealth Beyond the White Coat. Over there, you can ask your questions, get feedback from group members, and have a close community of medical professionals who are likely interested in the same things as you. Whether it's alternative investing, tax mitigation, ways to keep more of your money, or even protect your assets, we're going to discuss those things in the group. Additionally, we have a private investors club called Legacy Point. As a member, you'll get exclusive discounts to preferred vendors, and you'll get access to private investments that you'll find nowhere else. Whether it's hotels, apartments, oil and gas, equipment rental, you name it, we'll be discussing those details and offering those investments to members only inside Legacy Point Group. If you want to learn more about that, please contact me or simply email info, INFO, at legacypointgroup.com or go to the website legacypointgroup.com. And Wealth Beyond the White Coat podcast listeners get an exclusive discount if you use the code WealthBeyond. That's all caps, all together, WealthBeyond at checkout. I'd love to have you in the group, and I'd love to see you making more passive income as you move towards financial freedom, whether it's freedom to retire early, spend more time with your family, go on more vacations, or just do more of what you love while you're in the operatory. I'd love to see you doing that as part of Legacy Point. So here's to improving your financial health.
Yeah, historically, a lot of my investments I got through my boutique investors, I was getting 5 to 10%. The market's done pretty well over the past 2 to 3 years, so it's beaten those numbers. But I've never had strategies where I can defer the tax component of what I was investing, which is pretty extraordinary. And I didn't even know it was available, to the point where I called my accountant after I'd spoken to you guys, and he looked into it and he said, "Yeah, it seems legit." And from my side of it, 7 to 10% returns, it just wasn't all that exciting. I think as dentists and physicians, we tend to make a decent amount of money, and we're pretty big targets for a lot of financial institutions trying to sell us either insurance or some weird investment strategy. I mean, with you guys, everything seems to be like you want to capitalize on minimizing your taxes and advancing how much your return is. This one oil deal I'll share with you guys was the first 10 months I was getting like 12% a year, and then it just kicked up to like close to 4% a month. So like it's extraordinary. And then to have the tax savings on top of it is really pretty amazing. Everything, it seems, with you guys, what I've seen has been anywhere between 12 and 20% is more of a conservative rate of return. And then when things tend to do really well, you can exceed that. My risk tolerance is not all that high. It really isn't. And I did jump into this feet first. And so far it's been really amazing. I don't have any complaints at all. It's just now I find I'm struggling with trying to understand how much I can allocate out of my net worth into these investments that won't stir my buckets moving forward. Because like you always say, don't back the truck up to this. There's going to be plenty of other opportunities. I think that has been my biggest struggle. It's like, shit, I want to back the truck up in a weird way.
What we find is when people experience this ecosystem, they do get excited and they do want to back the truck up. We are big advocates of diversification, which you've heard us say before. And we are also not ever telling someone to liquidate their portfolio and to get out of stocks, bonds, leave their investment advisor. We're not telling them to sell their own personally managed rentals. And as a disclaimer, while the returns that you quoted are real, by no means are we guaranteeing those returns. By no means are we using those returns as an enticement for someone to invest. But you do, in the private markets, you do experience an illiquidity premium that has advantages, but the disadvantages are it's illiquid. And to speak to something that Darren and I have talked about this ad nauseum with people, is the due diligence ecosystem. And you did some homework on us. You talked to your CPA. I talk to CPAs weekly about different things. And everything in our world has been extensively due diligenced by third-party law firms that specialize in due diligence. Then you have other levels of due diligence on that. And in fact, we have a podcast episode recording coming up, I think, in a week or two, where it is due diligence. And we might talk for 3 hours. We're pretty excited about that one because it'll help educate people on that. Everything you're saying is all true and legitimate, but I want to dampen the tone because I don't want to, Darren and I would rather under promise and over deliver than over promise and under deliver. And so there is nuance and context to everything you're saying, but it is all true.
Yeah. I will say that all the deals that you guys did bring forward, there was never a time where I felt this is going to go away. You're never going to have the opportunity again. So this is out there. This is what's available. This is what we think it is. We think it's a good opportunity for you. But there was never any pressure. I've dealt with people before in the past where it was more like a sales pitch in a weird way, which you never get that kind of feeling with you guys, which I appreciate.
I tell people all the time, if the three of us were on a call, I would say, Jim, there is more opportunity than you, Darren, and I have money to invest. There is an extensive amount of opportunity to invest. So that's why you don't have to, if you don't like it, don't do it. And it's not the end of the world. There's other opportunities. And quite frankly, you just have to budget how much you want to allocate. Darren has seen that because he's had some opportunities come across his plate and he's had to figure out what he wants to do.
Financial freedom is about making the right moves at the right time. As practice owners, we often reach a point where growth stalls. Instead of maintaining at that plateau, consider cashing in now, putting that money to work for you, letting it double, triple, or even more over the course of your career, and then go pursue more of what you love to do. This is exactly what I did with my friend JW, a dental practice broker who found the perfect partner for my practice, maximized its value, and optimized the deal terms. He offers a free valuation for those considering a sale. If you want an introduction and the same red carpet treatment shown to me by my friend JW, email me at darren@legacypointgroup.com. That's DEREN @legacypointgroup.com. And I'll be happy to connect you with JW to start your journey to financial independence. Yeah, and going back to what you said a little while ago, Jim, which is you're comparing groups and you have to feel like you have to put the pedal down to get your ROI. And so that kind of feeds into that system of pressure, like whether it's external or internal pressure to like really get going here to feel like I put my money to work. Like we didn't want to have that be part of our environment. We want you to really sit around and process this, learn the stuff. Obviously, the whole point of why we're doing what we're doing is to get people to hopefully experience what we're experiencing. And because we eat our own cooking, we're investing in what we're doing here. But if it takes you 3, 6, 9 months to feel like I'm comfortable before I pull the trigger on investment number one, like we didn't want people to feel like they had to really get going to get their ROI on it. So I'm glad that you didn't feel any of that pressure from us, because yeah, that's definitely how we wanted to be different in what we're doing here.
Yeah.
So since joining Legacy Point, has that kind of changed? Have you gotten a better, kind of going back to what I said a second ago, have you gotten a better understanding of alternative investments? Like what's as far as your mindset towards investing in general?
Yeah, it opened me up to what the possibilities are as far as all these different classes that I really didn't even know existed. Everything from mineral rights to oil and gas to breeding rights to it's entirely different to what I was exposed to. Even my old partners, I've spoken with them on a few occasions. I'm like, man, it seems like I was doing things not necessarily the wrong way, but sometimes you just don't know what's available to you. So it's now at my point now, I'm almost I've changed my mindset where I know everybody speaks about freedom numbers and your burn rate and how much money you need to retire with in order to retire. And it's given me a better conceptual understanding of, man, I can just get a certain amount of my assets into certain classes and reproduce my income. And then I don't really, as far as my business, if I built a practice that I love and enjoy, and if I can do it on my terms, I can pretty much do this and for quite a long period of time. I work 3 days clinically now. My goal is to go to 2. And then if I have assets and that produce kind of returns like I've been getting, I could see myself doing this for quite a bit longer than my other plan was. So I've pivoted over the past 2 years pretty significantly.
It's interesting you say
That's
that.
interesting, because what I heard you say there is you thought you were sprinting to the finish line, but now that you've gotten more comfortable with investing and the returns and how that can replace your income, you feel like you can actually slow down and enjoy what you're doing a little bit more. Is that what I heard there?
Yeah, 100%, 100%. I practice in the best interest of the patients, which I'm sure most dentists do, but I do it in a fee-for-service model. And I don't need to work like a maniac anymore. It's nice. I just treat people who want to be treated with a high level of care. Before, I was always trying to run and gun, but now I think now with seeing what the possibilities are for supplementing my income, I can grow even a further associate-based model with my practice because I know I can offset some of my losses of my own personal production based on these other assets.
Yeah, when you can start, so many people, they sell their practice, they get a lump sum of however much money, and they try and recreate their income. But if you do well financially like you do, and you mitigate taxes, which I would argue is the highest rate of return you could get, is a dollar legally taken back from the IRS. So if you do that, and then you could deploy that capital where you're getting good rates of return, and good is relative, but I think your perspective on good has changed, then all of a sudden you can replace or recreate your income while still having an income. And that gets to be a lot more exciting because then you can work on your own terms. Because so many people sell, from what I've seen, because they're burned out for whatever reason, or they're just, and they can't work on their own terms. And if you can work on your own terms, then you can then work longer. And maybe that makes more sense for you because there's only so much fishing you can do. As much as you love to fish, there's only so much fishing you can do. But that's exciting. And the problem, I guess, not problem, the challenge is a lot of people don't know this world exists. Some of them go try and find it, and they end up finding things that are similar but very different, and then they're very subpar, and then they can get caught. And if a deal goes sideways, that can happen. We all know stories of that. Some people are just dollar cost average, stock market forever, and which is fine, nothing wrong with that. Some people just want to go buy a bunch of rentals individually, pay them off, do it that way. Nothing wrong with that. But there's always another opportunity. And I mean, I've talked to guys who are like, I've talked to them about tax strategies. There's no way that's real. And these guys are like 8-figure earners. And they're like, there's no way that's real. And I'm like, I got guys who make just as much money as you do and don't pay taxes. I got clients who make $2 million a year and $8,000 refund. And they're like, what are you talking about? I'm like, it's real. You just have to be exposed to it. It's just very non-traditional. It's not a $5 trillion market like the public markets are. And so it's different. And when people learn about it and become educated, they get excited, as they should. But by no means are we suggesting you should sell everything you have and put everything in the things we're talking about. That would be totally against the diversification we're talking about as it is. But one thing we haven't talked about, Jim, is like if you ever close your cash balance plan down, all these strategies can be invested in IRAs. And then there's really cool Roth conversion strategies, which we could talk about another day. But those things we've never even talked about with you. There's just other stuff we could do.
I know that's where I'm at now with my accountant now. We're just running through the numbers for last year for my cash balance plan. And when you had 3 partners, it makes sense, this plan. He goes, now with one, he goes, I don't think that this may be in your best interest moving forward. So that's what we're just trying to, and that's where I'm going to have to circle back with you guys and just let me know what my options are and how I can go about it a little bit differently.
Yeah. A lot of cool solutions there that would make you happy. So like Jimmy, you jumped headfirst into this group and you've gotten a lot of benefit out of it. Now you've talked to other people who they're familiar with this type of stuff, or they're not as engaged as you are. Could you speak to that from a standpoint of encouraging people, if this intrigues them, that they should engage more because it could benefit them?
Yeah, like 2 of my good buddies were with me when we first initially joined, and I know they were really gun shy to deploy their assets. I think people have such an emotional attachment to their cash on hand that they don't want to deploy it for some reason or another. They're going to miss out on an opportunity. And I think the only downside to a lot of these investments is the illiquidity, that you're going to tie your money up for a certain period of time, depending upon what you go into. But from our earliest conversations, I had a certain amount of cash, and you said, well, how much do you need mentally for yourself? And I think you got to answer that question for yourself. You need to know how much you need to have on hand in the event that something should occur. Who knows? I mean, we went through COVID 4 years ago. You never know what the hell is going to happen and what kind of cash you're going to need. But I think that if you can get over that attachment to having these big cash reserves, it doesn't make any sense, especially given this day and age with inflation. And if you're not going to get ahead of this curve, it's difficult. But I think you got to trust the people you're working with as well. And you guys are real genuine. You're forthcoming. You're not pushy by any means at all. You're highly knowledgeable, a hell of a lot more knowledgeable than I am. But I think that's just comforting to know that there's other options that are out there. But I can't speak to others and why they didn't jump in. I just know that if I do things, I'm not going to do things just for the hell of it. I've always been somebody who pushes everything to the limit and trying to advance myself and my education. And it has been a good educational experience as far as what I've learned with you guys.
Okay, that's part one of our conversation with Jim Woltmann, where we explored his journey in dental practice ownership and becoming a part of Legacy Point. He shared his motivations, his experience with traditional investments, and how diversifying with alternative investments through Legacy Point has significantly enhanced his financial portfolio. We went into tax advantages and some of the, quite frankly, impressive returns he's seen, all while emphasizing the importance of trust and due diligence. So, for the next episode, we'll continue our discussion with Jim, going deeper into his mindset shift towards investing and the impact of his work-life balance. He'll share more about the high return, high quality investments he's ventured into and the benefits he's gained from diversifying his portfolio. So don't miss out on Jim's valuable insights and advice for fellow dentists and investors. Thanks for listening in to Wealth Beyond the White Coat, where time and attention mean a lot to us. If you found value in today's episode, please consider leaving us a review on your favorite podcast platform and share it with your colleagues and friends. Your feedback helps us grow and reach more professionals like you striving for financial freedom. Until next time, keep pushing the boundaries of your financial health. Thank you for joining us on this journey to wealth beyond the white coat.